Hi and welcome to our analysis of Kolte Patil Developers Limited, a leading player in the Indian real estate industry. Since its inception, the company has witnessed significant growth, establishing itself as a trusted name in the real estate industry. The company established its presence in three growing Indian markets: Pune, Mumbai and Bengaluru. In this video, we will delve into Kolte Patil's industry landscape, revenue segments, shareholding, management, cost structure, financials and management outlook for the future. Let's get started on the stock analysis of Kolte Patil Developers Limited. But before that, let me introduce ourselves. We are PA Wealth, an investment services group. We offer stocks, PMS, mutual funds, alternative investment funds, insurance, and startup investments. Every week, we upload research videos on different companies, mutual funds, and financial topics. Stay ahead of the curve with the latest trends and insights by subscribing to our channel and clicking the bell icon to get notified about potential multi-bagger stocks. Let us provide a brief introduction to Kolte Patil Developers. Founded in 1991, KPDL is headquartered in Pune and boasts a strong presence in key markets like Mumbai and Bengaluru. They cater to diverse segments through their Kolte Patil and 24K brands, offering affordable, mid-income, and luxury housing solutions. Over the years, they've established themselves as a prominent developer, delivering over 58 projects, encompassing residential complexes, townships, commercial spaces, and IT parks. These projects add up to a saleable area of over 26 million square feet across their core markets. Currently, KPDL has a promising project pipeline of about 36 million square feet, including projects under execution, approval, land bank, and development management agreements. Now, let's take a look at the Indian real estate industry. India's real estate market is estimated to reach $1 trillion by FY 2030, with a CAGR of 19.5%. The market is expected to reach $650 billion by FY 2025, contributing 11 to 13% of the country's GDP. Now, let's discuss the revenue segments of Kolte Patil Developers. The sale of properties or flats, which includes residential, commercial and amenity plots, is the largest segment of the company's revenue, accounting for 91.8% of the company's total revenue for the financial year 2023. This is followed by the revenue from services, which accounts for 8.2% of the total revenue. Now, let's take a look at the management of Kolte Patil Developers. Mr. Rajesh Patil is the chairman and managing director of Kolte Patil Developers. Mr. Rajesh Patil holds a degree in civil engineering from the University of Mysore. He has been associated as a promoter with the company since its inception. He has more than 30 years of experience in the real estate business for business development, land procurement, funding requirements and strategy. Mr. Naresh Patil is the vice chairman of Kolte Patil Developers. Mr. Naresh Patil holds a degree in commerce from the University of Pune. He has more than 30 years of experience in real estate development, including company-level strategy, legal framework and safety. He was also instrumental in the company's geographical diversification initiatives, having started the Bengaluru operations in 1994. Mr. Milan Kolte is an executive director of Kolte Patil Developers. Mr. Milan Kolte holds a degree in law from the University of Amravati and a degree in commerce from the University of Nagpur. He has a total experience of more than 30 years in the real estate industry in legal matters, operations, procurement, liaising and planning of construction activity. Let's take a look at the shareholding of Kolte Patil Developers. The promoters are the largest shareholders of Kolte Patil Developers with a holding of 74.45%. Mutual funds hold 2.4% of the shares. Foreign institutional investors hold 2.59% of the shares. The public holds 18.45% of the shares. Other institutions include several investors, such as banks and insurance companies. They hold 2.11% of the shares. Let's take a look at the cost structure of Kolte Patil Developers. Raw material expenses are the largest component of Kolte Patil Developers' cost structure, accounting for 73.18% of the total costs. Power and fuel costs account for 0.2%. Other manufacturing expenses account for 1.3%. Employee cost accounts for 8.32%. Selling and admin expenses account for 5.5%. Now, let's focus on the financials of Kolte Patil Developers. The table shows that the company's net sales have grown steadily from 764.22 crores in the financial year 2014 to 1488.43 crores in the financial year 2023 at a CAGR of 6.89%. The company's profit after tax has declined from 116.91 crores in the financial year 2014 to 113.38 crores in the financial year 2023. At last, the company's return on equity has decreased from 14.51% in the financial year 2014 to 10.84% in the financial year 2023. Let's now turn to the management commentaries to get a better understanding of the company's performance. The company's revenue has grown by 33.2% year-on-year to 1488.4 crores in the financial year 2024 from 1117.5 crores in the financial year 2022. The company achieved its highest ever sales value of 2,232 crore rupees, growing by 85% year-on-year. They also achieved a sales volume of 3.27 million square feet, growing by 57% year-on-year in FY23 compared to FY22. The company's collection improved by 69% from 1128 crores in FY21 to 1902 crossing. In FY23, the company expects the non-Pune revenue properties to increase from 20% to 30% driven by sales in the Mumbai market with better realization and capital efficiency. Concerning deliveries, the company has revised its FY24 revenue guidance to 1,500 crores due to a revenue spillover from Q4 FY24 into Q1 FY25. This adjustment reflects a shift from the previous guidance of 1,600 to 1,700 crores. The company has a launch pipeline of 8 million square feet which is valued at 7,000 crores for FY25. The company acquired 2 projects in the MMR region with a revenue potential of 545 crores in Q3 FY24. Year to date, the company has acquired projects with a top-line potential of 4,000 crores in FY24. Margins for the current quarter were impacted due to low revenue recognition based on deliveries, lower gross margins due to realizing revenues for low-margin projects and finance costs which include provisioning for repayment against the funds received from the project-specific financial parameters. That's all for today. I hope you found this video helpful. If so, please give it a like and subscribe to our channel for more research-based financial content and click the bell icon for potential multi-bagger stocks. In the comments below, let us know what topics you'd like us to cover in future videos. Thanks for watching.